Forex
Good
price.
morning, everybody. Welcome back to the Opportunistic Trader. It is September 25th at 11 o'clock, and we're joined by Commodity Research Group's Ed Meir. How are you, Ed?
Hi, Michael. How are you? Nice to be with you again.
Good, I'm good. Yeah, we got a lot of different things going on right now. President Trump is talking to the United Nations, and he's been moving the markets a little bit. Equities were a little lower. Oil prices have been bobbing around in about a 60-cent range on his comments. He continues to kind of defend these levels and say, oil prices are manipulated and that he thinks they should be lower. So it's pretty interesting how oil's been reacting to his comments over the past few months and then just recently today.
Right. Yes. In fact, just before I came on, I was listening to his speech, sort of the predictable points. He really bashed Iran, took them to task over what they're doing in the region. But oil has been moving up anyway for the past few days or so. And I think the rally picked up steam once the weekend meeting of these OPEC and non-OPEC ministers came and went, and there was no agreement to increase output, much to President Trump's disappointment. So, in fact, I was reading the other day, analysts are looking at $100 crude, some of them are, for early next year, which is just unbelievable.
That's a
Um,
far cry from a few years ago when we were
sure,
offered at $30 and people couldn't
I
see it
know.
above 40.
I know you would have never thought it would get back to 100, but now it's certainly possible. You have the Iranian export blockade, so to speak, kicking in. The Europeans are all drawing back. November 4th, I think the sanctions really formally kick in. Venezuela's production keeps coming down, and the Saudis and the Russians may be pretty stretched. They may not have that excess capacity, so we'll see. The only thing argument working against it, as well as against a number of other commodities, is what happens to global growth. It's interesting. We have a chart, and I can share it with your readers later. We plot all the purchasing managers' indices, PMIs, globally, about 6 different regions. Every one of them is heading down except for the US. The US is sort of the only one that's moving up. The others, China, Japan, Europe, Brazil, Russia, all the PMIs are heading south. I think the U.S. also will start to weaken. Growth here will start to weaken. Maybe not necessarily this year, but certainly by the first quarter of 2019, we think the U.S. PMI curve will also start heading down, joining the rest of the group.
Yeah, that's interesting, and that'll be something to keep a very close eye on. The rest of the world has underperformed heavily equity-wise this year, and maybe that's part of that as well.
Right, right. And today the Germans came out, a couple of research institutes there, they dropped their growth forecast for this year and next. So, it's starting to, all this trade tension, unease, it's starting to have an impact overseas, and I think we're going to start seeing it spread here in the US. So I'm doing a lot of work on the ramifications of trade policy now on different commodity markets, and the metals will suffer, because if we buy, and we talked about this a bit last time, if we buy less Chinese goods, they may not necessarily be replaced as quickly from other countries, and if they are, they'll be more expensive, which would mean that some people may just not buy them. And there was an example of brakes, repairing your brakes in a car. I think the price could go up from around 280. These are the brake pads, I should say, $280 to $400. $400 is not much money for maybe you and me. We will definitely replace our brakes, but if you get a marginal consumer there, they may balk at spending the money. They may wait for 6 months or a year until their brakes really deteriorate, and then they'll change it. So in the meantime, all this means less consumption of various commodities.
Yeah, interesting. So take me through. We've had some big moves in metals. Copper basically over a 10% move over the past 6 or 7 trading sessions. Was
Yeah.
that kind of more of a dead cat bounce, or was there any news with it?
I think it's a bit of a dead cat bounce. Keep in mind, we were quite oversold. We've been dropping pretty much steadily since June. So the market rallied, as you said, about basis COMEX about from its low about 23 cents a pound. We're right now just under 284. Couple of things kind of made the move. What was behind the move? Uh, Ironically, the tariff announcements, when it came out at 200 billion, the markets kind of reacted positively because the levy was only 10%. People were expecting 25%. So what happened? I guess the markets interpreted the 10% move as maybe an opening that, it's not as bad. Maybe the US and the Chinese will now start negotiating uh, earnestly. The Chinese retaliated with 60 billion. So net, the news was interpreted kind of trade light. It wasn't a it wasn't a very uh, shocking or dramatic statement. So as a result, many markets, including equities, shot up last week. I think now that calmer heads are prevailing, I think we're going to see a bit of a drawdown because this trade dispute with China is not a matter of just identifying their, sneakers or their clothes or their automobiles or whatever it is. We are after a fundamental restructuring of their economy, and they're not going to swallow that very easily.
Yeah, absolutely. So, what's your take on precious versus industrial metals here?
Uh, two, two things. The precious group, gold, silver, dead in the water, which I'm very puzzled about because the dollar index is now at a 10-week low.
Right.
Typically, it usually turbocharges gold higher, but this time it's just not doing anything. I think we've been in a $15 trading range for the last 2 weeks on gold. Similarly on silver, we're just not doing very much. Today, a little bit more action on silver, up 25 cents. Gold is only up 3. But the other metals, platinum and palladium, they've kind of hitched their wagon more to the base metals group, and they've had some nice moves. Palladium is now at a 6-month high, I believe it is, and it just rocketed higher. Keep in mind, it's much tighter than platinum. The market is in a deficit. Palladium is geared more to the US and Chinese auto markets as opposed to platinum, which is geared more to the European markets and a heavier reliance on diesel engines, diesel catalytic converters. So, of the two, all things being equal, I would prefer being long palladium as opposed to platinum.
Interesting. Any other kind of metals? Like you said, actually, silver's having a decent rally today, up
Yeah,
over 1.5%. Gold
right.
continues to be stuck near this 1200 level. It's a bit of a magnet right now. I guess this ties into tomorrow, what I was going to get to next, FOMC. Is there any expectation on, the precious metals having a big move after the FOMC?
You know what? If I were long gold, I'll probably stay long going into the meeting. If you want to possibly consider a position, I would also consider a long position going into the meeting. And I say that because the dollar has been consistently selling off over the last 10 weeks, going into a Fed rate hike. Granted, it's discounted, but I think what will happen is the policy language might be a bit more dovish than people are expecting. So we could see further dollar weakness. And once that's out of the way, gold might have a better shot at moving higher because it really can't ignore dollar weakness forever. At some point it has to react. And maybe today's move in silver is a case in point.
Why are you looking for a more dovish Fed tomorrow?
They might start looking more at the international macro picture. I think that should alarm them a little bit. I think they're starting to see a lot of feedback from businesses saying that their supply chains are getting more strained in terms of costs. So I think they're going to maybe telegraph the markets to the effect that we could be starting to see things slowing down a little bit. The last Fed Beige Book report actually alluded to cost pressures and some slight deceleration in activity in some of the regional sectors they follow.
Yeah, it's going to be interesting. So, what do you see as we're expecting a hike tomorrow and then another hike in December?
Yeah.
What do you see priced in for right now for 2019?
That's a good question. I think it all depends. I think the Fed really needs to raise the rates as quickly as they can within this strong economic environment, because they need to raise it high enough so they could lower it again when we slow down. So, if we're only at 1%, there's not much bang for the buck if you lower it to zero. But if you lower it from 3% back to zero, you get much more impetus. So I think the Fed should hurry up and raise the rates. I think we'll get 2 rate hikes this year. The expectation is for 3 next year. Maybe we'll get 1 or 2 next year, and then they're gonna stop, because by then I think the economy will probably slow down. Keep in mind also the tax cut. I think that really juiced up earnings, at least in the equity markets. That's not going to be replicated next year. The revenues generated from the tax cut itself probably was spent this year, if in fact it was spent. All that money overseas that was supposed to flow back, that's not been flowing back. So surprise there. So I don't think we're going to see the same stimulants that we had this year. We're probably not going to see it next year. Plus, we have the headwinds of higher rates.
So, with all that being said, are you more dollar bearish and gold higher? Sort of, is that your thought, that you think that the Fed won't be as hawkish and that it's actually going to play out, that the data is going to start coming softer to maybe get the Fed to take their foot off the pedal?
Yes, I think short term, I think that's what the thinking is. Despite the fact that I think they're going to keep raising rates, I think the market is probably looking for a bit of a pause or a bit of a indication that they may slow down their rate increases. So I think that's what's behind the weakness in the dollar, because I thought the dollar would strengthen going into September. I thought, the trade tensions are still there. I thought the rate move will be a reminder that, the US is certainly far ahead of many other central banks. So I was very surprised that the dollar has just weakened. So I think we're going to see more of the same. The market is reinforcing the message that the Fed is going to be dovish, or at least a little bit more dovish. So tomorrow should be an interesting day. If the dollar weakens again, maybe we'll finally see some movement in gold.
Well, it's been interesting actually about the recent dollar weakness, because people have kind of haven't really looked at it that much, but euro was trading 113.50, and here we are yesterday, we traded 118.10 or so. So it's
Right.
had a decent move, but the interesting thing is also it's done it in the face of higher US yields. 10-year was trading down at 280. Now we're above 310. So that's a fairly decent move over a short period of time, and the dollar's actually weakened into that.
Very puzzling. Yeah, very puzzling. In fact, there was an article in today's Wall Street Journal just on this point. I haven't read it yet, but the author was talking about why is the dollar so weak in face of these, in light of these rate hikes.
Yeah, and what about the China perspective on all of this? We started talking about copper at the beginning, and I'm kind of going back there a little bit. Shanghai, which is down, the Shanghai composite, which was down over 20% at one point, had a pretty strong rally, which correlated with that copper rebound. You get the sense that copper is going to be heavily tied towards the Chinese markets and news and basically the market moves there.
Yeah, I think what's happening, part of the reason we also rallied, which I forgot to mention, I think the Chinese markets are they've kind of they're looking away from this trade issue. It is what it is, and it's going to be prolonged and protracted. But I think what's given the upside some momentum in the Chinese markets is the fact that the government is rolling out, fast tracking a lot of stimulus projects, more infrastructure spending, more fiscal stimulus, easier money. So I think the Chinese equity markets is looking to that to kind of provide new momentum, and metals picked up on that as well, because the trade issue doesn't look that bright. It still looks pretty messy. So they're not going to get any relief on the trade side, other than this 10% versus 20% move that seems to have excited some people. But leaving that aside, I think the discussions are still very difficult, as I mentioned earlier. So people have moved on to looking at, okay, what else can we do now that the trade talks are stalled? We might have more stimulus coming our way, and that's bullish for metals, bullish for Chinese equities, and that's why we've been pretty strong over the last week or so. Whether that's going to, whether you could bank on that to last, maybe. I don't think we're going to retest our lows again on all these metals, our mid-August lows. But I think it should provide an element of support.
Yeah. So it's getting towards the end of the month here. It's September 25th. I know you and your team put together a great monthly report, which you've been posting on our site recently. Tell me, what are you looking for? I'm sure you're starting to type that report up. What are you thinking about, and what's going to be included in the October? A little sneak peek.
A little sneak peek. Thank you for that. I'm working on it as we speak. Actually, I started it yesterday. I'll be working on it all weekend, and we hope to come out by next Tuesday or Wednesday. If your readers don't know, we cover 28 different markets, I think it is. We just give a quick overview as to what we think, where we think things will stand. I think, it's not going to be anything dramatic in October, kind of more range-bound trading in many of these commodities, because the rate move will be out of the way. We'll have to get the Fed statement out of the way as well. We probably will see the dollar continuing to weaken a bit, so that should hold the decline somewhat in place. But on the upside, we're going to see the rallies capped because of slowing growth, especially overseas, and these trade issues that are still not going away.
Yeah, it's interesting how the dynamic has flipped a bit, because everybody was bullish dollars a few weeks
Right.
ago, and here we are back. And I'm still hearing a lot of people I speak to still on the bullish dollar side, based on the idea that rates are going to continue to move higher. The Fed is still the Federal Reserve is still raising rates and has the highest interest rates. And when you look at it, the dollar is the high yielding currency in the G10, which we haven't been able to say
Exactly.
for over a decade. So those are the more dollar bullish things, but we have seen that pullback, and you're talking about possibly seeing weaker dollar. But at the beginning of the year, the dollar was weaker, the euro was above 120, and
Right.
not many people saw the dollar stronger. So it's always a bit of a lag.
No, it certainly threw me. I was one of those that was wrong, completely wrong on it. I thought it would strengthen over the last 2 months, and it's just been declining steadily. Maybe the markets are looking in advance. They are looking in advance, and they think we're going to slow down here, which is why I think the dollar is weakening. So that's the only thing that explains it. I can't really see anything else. And they see this trade thing as dollar bearish in a way down the road, because it kind of contributes to the narrative of things slowing down.
Yeah. Any currency specifically that you're taking a look at? I think last time you mentioned dollar CAD, and that's heavily moving around the idea of NAFTA talks and a new deal with U.S. and Mexico. Any other currencies?
Yeah, the Canadian dollar has strengthened, I think, since we last talked about it. Sterling, I would stay away from. Every day you get a news story about Brexit. It's really a hard one to call, because you just don't know which way this thing is going to go. The euro, I would probably want to be getting shorter the euro as we approach the 120 mark, mainly because of the growth picture in Europe, which isn't looking that great. Nothing really stands out. I think some of the emerging market currencies are starting to stabilize, but whether they'll run up or not, it remains to be seen. Brazil has its elections next month. That's a complete open guess as to which way it'll go. There are candidates on the left and right. uh, more or less equal in the polls. So that the real could really have a big move either direction depending on who gets in. Um, but I think the dollar index is chart wise technically doesn't look that great. It's certainly does not. It hasn't rallied at all in September, and looks like there could be a bit more downside in it, just technically.
Yeah, well, like you said, I think we know that the Fed is raising rates tomorrow, and so that's baked in. But it'll be interesting to see what the comments are and what the
Yeah,
guidance is, and see what the market reaction is as well. Because we're at some interesting levels. Yields are basically on the highest level of the past year or so as we approach this meeting, and the dollar is weakened. So it'll be very interesting to keep an eye on tomorrow. That's tomorrow in the
exactly.
afternoon.
Right, exactly.
Cool. All right. Well, definitely keep us up to date. Look forward to hearing more about that. And then looking at the monthly letter coming out next week. Good luck writing that and preparing that.
Thank you very much, Michael. Always a pleasure to talk to you.
All right. Thanks, Ed. That is Ed Meir of Commodity Research Group. We'll talk to you soon.